Are you familiar with the Hunt brothers cornering the silver market in the 1970s? This was the last time silver moved so much in a single year. Pay attention because there are shocking similarities to today. In 1971, Richard Nixon took the US off the gold standard. Two oil tycoons, the Hunt brothers, feared runaway inflation and the deterioration of the US dollar. To hedge against inflation, the Hunt brothers began buying physical silver at $2 an ounce. The price quickly jumped to $6 an ounce. But they wanted to magnify their exposure and control the market, so they started buying silver futures contracts instead of physical silver. This concept, called leverage, allowed them to control $10 worth of silver for every $1 they invested. The result? The silver price exploded, rising 430% in 1979. The Hunt brothers controlled a third of the entire silver market, and their holdings reached $20 billion. Then the government stepped in. In early 1980, they called it market manipulation and disallowed the use of leverage for silver purchases. The bottom fell out. Silver's price dropped 50% in 1980 and another 50% in 1981. Fast forward to today, 90% of all silver transactions happen via futures contracts, and 90% of those contracts use leverage. History tells us this isn't new. In 2008, leverage rules changed, and silver dropped 60%. In 2011, the same thing happened, and silver dropped 50%. So what happens if they change the leverage regulations like they've done 3 times in the past? And here's a big question. There's one major reason the government wants lower silver prices today. What is it? Leave your answer in the comments and I'll pin the correct one.